Hi, my name is Alex Carlucci with GustonShow.com. I want to talk to you about down payments on different programs and where that has to come from. So let's talk about conventional first. We have a 3% down, and that's only eligible for people that are the first-time home buyers. So if you've not owned a house in the last 3 years, you're considered a first-time home buyer. If you have owned a house in the last 3 years and you're selling it and you're buying another one, then there are some eligibilities for doing a 3% down still, but you have to have an income cap. So if you make over a certain amount of money, for example, in Chicago, if you make over $70,000, you're not eligible for the 3% down if you currently own a home or have in the last 3 years. But if you make less than that, you are eligible for 3% down, even though you're not a first-time home buyer. And again, first-time home buyer means not owned a house in 3 years. I know that sounds crazy, but that's what it means when it comes to that definition. So if you don't pass those tests, then 5% down conventional, and you can go up the ladder to more than 5%. You go 5, 10, 15, 20%. All of these funds can be gifted to you. Hold on a second. My thing broke. So all these funds can be gifted to you, and that's allowed for conventional. If you're doing investment conventional, the funds cannot be gifted to you. So keep that in mind. If you're buying an investment property, it's going to require we do 15% down, but the rate is very high and it costs a lot of money. But we do 15%, we do 20%, we do 25% and beyond. But if you're buying a single family home, I recommend you put down 20% to get the best rate. At 15%, you're going to be paying a couple points for that rate. So that money cannot be gifted because investment property has to be your own money. Keep that in mind. And you have to have reserves when you buy investment properties. So when you have reserves, that also has to be your money. So keep that in mind when you're buying investment properties. It cannot be a gift, nor can the reserves. When you go to FHA, we have 3.5% down above 580 credit score. We have 10% down from 500 to 580. And then we have our non-QM products that start at 5% down and go up to 40, 50% down requirements in the condo hotels. But the 5% down is for our perfect borrowers with no housing events, no foreclosures. They just can't go conventional right now there's little reasons why they can't. But if you got a 780 credit score, you're putting down 20%, or you want to put down 5%, we can do it on a single family home, 780 credit score, no housing event in the last 4 years, no foreclosures, no bankruptcies either. So keep that in mind. So we have non-QMs of 5%, as low as 5%. And then we get the USDA that you can do no money down. Again, the USDA has a very low DTI cap at 41%, and it counts all the family's income in the house, and you can't exceed a certain family income. So they don't want you to be rich, but they don't want you to be too poor. So it's like, yeah, be right in that sweet spot if you make just the right enough money. And also, the town that you're buying in has to have funding for USDA. Some towns are out of money. They don't have the funding, and only the realtors can really pull that up and say, well, there is eligibility for funding in this town. Now you can go buy USDA with no money down. So those are basically our main products we do. And of course, VA is always no money down. Those are our products. Those are our down payments. You can get a gift on everything except investment. You can get everything else can be a gift. Give me a call if you got any questions, 630-915-7550. Sorry for the technical problem that we had. Thank you very much.